Hi there, how you doing? I really hope you're doing all right. It's my hope that you're doing fine in these markets. I hope you're killing it. Okay. Matthew's here from my name Qml Forex Traders. Back again with the very interesting video. As you've seen from the title of the video. So today I want to talk about something very interesting. I know I've touched a little bit about it several times in the past videos, but I want to talk about this setup individually. If you're new to our channel, you're welcome. Please feel free, watch the videos, and yeah, I hope you find value in these videos, right? That's my hope, and I'm sure you are. Okay, so today what we're going to be looking at is QML plus fake out. Okay, fake out, fake out setup. All right, so in this particular one, I'm going to be looking at sell setup. Okay, so I want you guys to pay particular attention because this is very important. Because this is very important. So I'll encourage you to sit back, have a cup of coffee, and yeah, let's get ahead with this. Okay. So by the way, if you're new to our channel, please consider liking the video, subscribe, and also leave a comment in the comment section. Let us know how we can improve as a channel so that we can produce better content, and then also you can also learn better, right? Okay, so let's get started without wasting much of your time, you guys. So as you've seen from the title, it's QML plus fake out self setup. All right, so you guys, what we trade here is the advanced supply and demand strategy, okay, which we call the Quasimodo strategy. So what is a Quasimodo strategy? So in simple terms, a Quasimodo strategy will look like this. All right, so we've got a higher high and a higher low, right? So we want to make sure that that particular uh, pair you're trading, or commodity or asset, like in just general, any asset that you're trading is in a trend, all right? So it can be either in an uptrend or downtrend, right? And then you have price now breaking market structure. So you have something like this, and then now market break structure, right? So with the normal QML setup, usually we expect to sell here. You wait for the market to come back to this level, right? Come back to this level, and then you sell, right? That's the basic QML setup. All right. So today I want you to be focusing from today onward. I want you to be focusing on this. So what I'm going to be talking about is the advanced one. Okay. So it's not a quick retest, but it's a late retest. So late retest uh, setups work best, and yeah, of course they take longer, but they work best. So what happens is market comes like this, it does something like that, then yeah, there'll be a little of fake outs there, and then it drops. Finally it drops like that. Okay, so this is the basic QML setup. All right, so you have right here, you have your higher high, you have your higher high right here, and always make sure that this higher high, like I'm always saying in my other videos, make sure that this higher high is not having levels where it's being treated as resistance or support. You have to make sure that that happens. Make sure you don't have levels where the market is coming to this level. You don't want price coming to this level, because if price comes back to that level, therefore it reduces the chances of that particular trade working out, because price usually breaks out of that level. All right. So this is the basic QML. So you have to make sure you have your higher high, your QML, your low, and you have your break of structure right here. So you have your break of structure, right? So your higher high, your QML, you have a low. The market breaks this QML, makes a higher high, and then starts to come back right now. As it's coming back, somewhere around here, price will hesitate. All right, and this usually we have our MPL. I'll make a video about the MPL soon. So please make sure if you want me to make a video about the MPL, please comment in the comment section so that I can see how many people want me to make that video. All right, so you have to have that somewhere here or somewhere around the QML. Of course, it can be above the QML, at the QML, or below the QML. This determines where price reverses from. So it's that important. All right, and then you have this significant drop. All right, so this is the base. This is the basic. This is what you want to see basically. All right, so you want to see this. Okay, price. Price making a high QML, a QML low and a higher high, and then it gives you an MPL here, maximum pen level, and then price breaks. Remember this level, this move that breaks structure, you want it to be a significant move. Okay, so after this, what usually happens in our setup right now is, remember this is a fake out setup. Okay, so price comes to this level, comes somewhere here. Let me change it to blue. Price comes there and then it drops. Okay, all right, and then usually you have what we are calling let me just draw this. You have this level here. Okay, so let me just remove this so that I draw. I want to be very clear on this one. I want you guys to understand what's happening right here. I want you to understand. Okay, so pardon me, I'm trying to be very precise right now. Okay, so you have market coming to this level and then dropping, right? And then another time it comes to this level, right? And then it drops. Okay, it drops like that, and then now the market comes for this for the fourth time, and then probably drops a little bit, and then it pushes to the upside. Okay, then from here market drops. So what do we have here? So allow me to label it. Okay, so what we have here, what you had actually here was what we call a support. We had support right here, so we call it S1. All right, so that will be your S1 right here. Okay, let me just make sure that it's clear enough. Yeah, then this one here becomes your resistance 1, and then this is your resistance 2, and here you have a resistance 3. Okay, yeah, something like that. Okay, so you guys know how we trade support and resistance. What are we taught? We are taught that the more touches the level has, the more likely it's going to hold, right? The stronger it is. But in this particular setup, in the Quasimodo strategy or the advanced strategy, we know that where there's resistance, where more retail traders are trying to sell, big bank or the smart money are trying to buy. When they're about to buy, when they want to buy, they want you to be doing the opposite, right? So if they want to buy, they want you to be selling, and if they want to sell, they want you to be buying. So basically, you will find that there'll be a lot of stop losses right here because of this resistance here. More retail traders will be trying to sell at this level, right? So it has held. So it is with support tending to resistance, right? It's roughly. And when they see this, more retail traders will be trying to sell at this level. Therefore, they'll put their stop losses just above here, right? That's what we are told. Put the stop loss above resistance. All right. And then what does the market do? it gives you some confidence. So we are told that you should wait for market to give you at least 3 touches. So this is the first touch, second touch, the third touch, the fourth touch we sell. And what happens on the fourth touch? You have market giving you some a little bit of confidence that it's going to go in your favor, and then it just pushes through and reaches a certain level and then drops. All right. So this right here is what we call the fake out zone. This is the fake out zone. I hope you understand where the name is coming from because of the same manipulation which is happening here. And then market usually turns from what we call an MPL. All right. So this is an MPL. An MPL is simply maximum pain level, the pain which is caused by the smart money to the retail traders. That's why it gets the name from. Okay, because of what is happening here. All right, when the market is at support, retail traders are trying to buy. If you take them out just like that, and then when you tend to sell at resistance, you take them out, and then eventually go in their favor. Now that's called the maximum pain level. So you guys, if you want me to make a video on that one, please let me know in the comment section. So right here would have to depend. Okay, you can have a drop based drop, a rider based drop, or anything. So right now what I'm having is the drop based drop or a rider based drop, whatever. So give me drop based drop supply. So that's what you have here. All right, make sure you look for your MPL. So the QML, this QML is less important when you compare it to the MPL. So make sure you look for your MPL. It's very important. Okay, how you look for your MPL? You get your horizontal line and make sure that you look for a level where it has a lot of rejection, both from the above and below. Make sure you have a lot of rejections there, and then you are going to identify that as your MPL. So this is what we have here. So this is what we call a QML plus fakeout. This one is called fakeout. You've seen this. So we had an SR flip. SR flip simply means support turned into resistance. So this support here turned into resistance, and it tempted retail traders to sell. And then yeah, they get trapped right here. They get trapped just right here, and then yeah, market goes in their favor at the end of the day. So we have to capitalize. We have to identify this level first. Once you've identified this level, wait for price to break this level. Once price has broken this level, then we sell where at the at the MPL. All right. Remember, this MPL can be slightly above the QML, can be at the QML, or it can be below the QML. Your job is to simply identify where the MPL is and then sell. So when we sell here, we want to put a stop loss slightly above what your MPL, right? And the take profit is of course going to be on your next fresh demand zone. And make sure that your MPL is a fresh MPL. You don't want anything that has been used, because it won't contain, or it will actually just contain few orders. All right, so you want the fresh one because it contains less orders. So this is basically how it is. So let me just divide this thing for you guys. I want you to actually pay particular attention when you're looking at this right now. So I will divide this into 3 parts. Okay, so please pay attention. If you have any questions, please feel free to leave them in the comment section, and I'll get back to you guys. I want you to understand this so that you don't make the mistake I used to make. Okay, so I'll divide this into 3. First, approach, the progress and the approach. So there is the past, progress, and the approach. So what do you want to find in your past? All right. So you want to find the QML. So you want to find QML. Now that's number one. Make sure you have your QML. Make sure you have your QML, right? And number two, make sure you have that low. L is for low. Make sure you have the higher high, and make sure you have MPL, and make sure that you also have the lower low. Okay, so yeah, that's number three. That's number four, five. What else? Yeah, so QML, low, higher high, MPL, and the lower low. Of course, the break of structure. Of course, that lower low will cause the break of what? The break of structure, which is BOS. Okay, it's very important. Make sure that this lower low, this candles that cause the lower low, make sure that significant candles. So this is what you need. All right, and this is your lower low right here. So you want to have your QML, which is here, the low, which is here, the higher high, the MPL, and the lower low. And the lower low will cause the break of structure right there. So this is the past. This is what the smart money are trying to do. These are the tricks that the smart money are trying to do in order to actually cause all this movement. And then you have to make sure that this is ticked. Make sure this happens. If there's nothing, please don't take the trade. Look for there are a lot of trades out there. Make sure you take the right trades. Focus on taking quality, high probability trades. All right. Then number two is the approach. Okay. So the approach. How does the market come to this come back to this level? All right. So here the four about like three things that I want you to pay attention to. All right. So the first one is the same one I'm talking about, the fake out. The second one is the compression. All right, that's the compression. Then number two, and then the third one is the diamond. Check out the diamond, and the fourth one is mixed. All right, so like I've told you guys, I'll be making more videos, but this one today I'm going to start with the first one on how the market comes back to the QML. All right, so I'm talking about the fake out, which is the one I've explained right now. So market can come back in the form of a fake out, a compression, a diamond, and a mixer of all these three. All right. So I hope this is very clear. Okay. And then you can also have an SR flip. Okay. So you can also have an XR flip, but that's just like the same with the fake out. All right. Like we had this an SR flip fake out one. Okay, so this is what I want you guys to pay attention to. Pay close attention to these four ways in which the market can come back to our level. All right, so a fake out zone, of course, you're going to have market having dual resistance like this one, resistance, and then the third time market probably breaking that resistance, going to touch on the QM on the MPL or the QML, then drop, right? Meaning trapping all the retail traders who are trying to sell here, consuming their stop losses and then turning them into liquidity, and then using that liquidity to actually make the market move in the opposite direction or in the same direction that they thought the market was going to go. All right, I hope that's clear. And then the approach. Now, how does the market come back to this level? All right, so you have to make sure that you don't just because you have everything set up right here and then guarantee that that trade is going to work particularly. All right, so you have to make sure that you wait for the confirmation. On the approach, we're waiting for price to give us an indication that the market is going to what? To reverse. So what I'm talking about here, I'm talking about the market giving you a confirmation like reversal patterns and the reversal candlestick. I'm sure you guys know about those things, all right? So you have to make sure that you know bullish and bearish reversal patterns. Make sure that you also know bullish and bearish reversal chart patterns. So I'm talking about on the candlestick patterns. I'm talking about, of course, you have to make sure that is happening on the MPL. You have like things like a shooting star, right? Shooting star. You have things like that's your reversal pattern, a reversal candle. Shooting star can have what else? Like a bearish engulfing pattern, bearish, bearish engulfing. Yeah, I hope that's the correct spelling. Yeah, and then you can also have like any reversal patterns. I mean, any reversal candlestick patterns. Okay, and then you can have on the chart patterns. You can have things like a wedge, a rising wedge, or you can have what else? Some things like what? Like a what can I say? Like maybe a what else? Like a triangle. Like what do you call that? A rising triangle, right? So you know a rising triangle cause price to actually drop. So you have to have those things. So right here, we don't want to take trades blindly. We want to make sure that we have confirmation when we are taking these trades here. Don't take any trade blindly just because you know price reverses at resistance. I mean at the MPL or at the QML, and it's just going to jump into the charts. You're going to get banned. All right. So make sure that you are patient. Wait for your setup to happen, and when it happens, take a trade, put your stop loss above the MPL, and then you're done. And make sure that you stick to your risk management plan because that's the holy grail, guys. That's the most important part. Make sure that you're sticking to your risk management rules so that if you take a lot of losses like that, you're going to still bounce back up because our strategy gives us a very big risk to reward ratio because we're trading with the banks, we're trading with the smart money. All right. So that's how it is. I hope this is very clear, guys. I really hope this is very clear. If it's not, please feel free to comment in the comment section, leave a comment in the comment section, and I'll get back to you definitely. I'm going to get back to you, and also just let me know what you'd like us to cover. So I'm going to show you a trade that we took today. Okay, it was actually on Nasdaq 100. I'll show you what happened. So it's actually the same thing I'm just talking about. It's what we had a very interesting trade today. So it was like this. Remember, I have my higher high right there. So that's my higher high here. I have my higher high there. All right. Remember what we talked about, guys. This is my higher high, and then this right here is my QML. Okay, this is my QML right there, and then this here is my low. Okay, and then we had break of structure, right? Remember what we said that we talked about this, guys? This is the past, right? Remember, this is the past, and then what's remaining here? A lower low in what? A lower low, which is here, and the MPL. Okay, so for the MPL, we have probably to go to the lower time frame and find somewhere here. Of course, it can be a drop base drop or a rally base drop. Basically, we're looking for an order block, right? We're looking for a level where the market was balanced, okay, or where there's a lot of manipulation. So we'll go to the lower time frame and look for that. So this is the past. So I'll just put the label here. This is the past. Yeah. And then what else? We're looking for the process. Now, how is the market coming back to us so that we can sell? How is the market coming back to us? So Remember, we're looking at we're looking for fake outs. We're looking for fake outs, and if you look at this level, we had a lot of rejections at this level right here. We had our first resistance here, R1, which is resistance 1. We had R2 right here, R2. So when retail traders see these resistances, remember we are told to wait for 3 touches. Okay, ironic, and usually on that 3 touch, on the third touch is where we have actually the market actually going against us. Okay, so this is what happened. So we have 1, 2, 3, 4, and this is what we call what, the fake out zone, right? This is the fake out zone. Okay, this is the fake out zone right here, because we have market respecting this, and then look what happened. Market literally just broke out of that level and then went a little bit in our favor. So I'll show you guys. So we had this. Okay, so what did we call this? We call this our approach, right? So this is our approach to the to how does the market approach our label. So this is the approach right here. Yeah, this is the approach right here. So let me just move this to the other side. Let's move this to the other side right here. So you guys, if you have any questions, please feel free to actually comment in the comment section so that I can actually get back to you guys. Okay, yeah, so this is the progress. This is the progress. This is the progress right here. Progress. Okay, right here. So the progress we had fake outs, and then now we had a very a very interesting case here. So we had something very interesting happen here. I will show you in a minute. So here is where we look at the approach. Okay, so we are looking for reversal patterns here. So let me just move this to this level. Yeah, somewhere there. Yeah, somewhere here. Yeah, I think somewhere there. Right there. Yeah. I think I have to delete this in a minute. I'm just going to show you like I was showing you on the other part where I was actually drawing. Then this is the approach. So like I've explained you guys. So we just have to look now. We look forward for that level. So it made all our criteria. So let me just delete this so that our chart is less clustered. Right now it looks very clustered. Yeah. So basically, I'm going to look for my what? Uh my MPL, where I thought the market is going to turn from, right? Yeah. So where is my MPL? Remember, it's at this level. So I can go to the lower time frame and find that level where the market gave me an order block. So an order block, what is an order block, guys? This is just the last, like in this case, is the last bearish candle before the bullish move. The last bearish candle before that bullish move. Okay, that's our order block. And if you look right here, you're going to see that candle, and that our job is to simply get that candle and draw our level like that. That's that candle there. Yeah. So you can cover that candle. There are a lot of ways you can do that. There are a lot of ways you can actually cover that candle. Others just cover week to week. Others it's maybe the opening and the close. So there's no one right way of doing it. So you have to find what works with you and what you're comfortable with, right? So that's how it is. So we had this happen. We had this happen. This happened. Okay. Yeah. This happened right here. So we had actually just a zero float. That's what happened. Yeah. So the market came to my level. It broke out of that resistance, as you can see from here. So this is the fake out zone here. It broke out of this resistance, right? Look, this was the same resistance the market was respecting, and then we had this now happen. So that prompted me to actually enter this trade. Actually entered right here. Look, the market came in and triggered me because I saw this. I was like, okay, this is interesting because market just went in and tapped into my zone. That was confirmation. So if we can go to a lower time frame, let's go to the lower time frame so that we see what was happening on the lower time frame. Let's go like to 15 minutes. Let's go to 30 minutes. Okay, you can see. How about 15 minutes? Yeah. What did I have? We had price giving me a shooting star. Okay, so I had this candle here that went in my zone right here. This candle here. I was like, okay, I entered on the next candle open right there. I saw this. I was like, okay, I think it's time to go in. I entered from there. In a minute, I'll show you the screenshot. Actually, after going in the market dropped like 130 pips. Like just like that. Like 130 pips drop. This drop there. So I entered right here. And then you can see, let me just measure this from here. The market dropped from there to here. Yeah. So that's like 116 pips. Okay. That was like 116 pips drop. I know it looks very small, but that's actually 116 pips. This is not the 100, by the way, on the 1 hour time frame. All right. And because of that, I entered right there and I put my stop loss slightly above this level right there. And I was actually hoping for the market to drop somewhere to my fresh zone here. That was my hope. Okay, according to how I trade my strategy. Okay, as you can see, the market dropped a fair bit, dropped up to this level. It dropped up to that level, and yeah, and immediately, probably after hitting some zone here, some demand zone right here, and then the market pushed to the upside again. After seeing that, I was like, okay, I think I'm out. I moved my stop loss to break even into profit. Actually, I got a little bit of profit actually, and then the market went against me, and probably most of the people were taken out by this move, unless of course you don't put a stop loss. If you didn't put a stop loss, good for you, because it went against me, against what we thought the market was going to do. Of course, it gave us 100 pips. I mean, that's a lot of pips. It would have made some good money from this trade alone, even though it reversed. By the time it was reversing, of course, I'm sure I hope you didn't just let all that 100 pips just go away like that, because that's money, you guys. So This was my drop, my rally based drop right here. Rally based drop supply zone. And it's amazing how the market respected that level and it dropped like that. I was like, okay, this is very good. I shared this trade before it happened on my Facebook, page, and also on our Telegram channel a little bit late though. Sorry guys. Yeah, this is how it was. Okay, it was really interesting. It dropped like 115 pips, just like that, and then eventually it went against us. I really hope you got something out of that. So let me just show you on our Telegram channel. I think I shared this in the public group. Yeah, I shared this. Let me just I can show you. This was the before. You've seen this was the before, right? The market just came to our level and then it dropped. And then this is the trade. You can see this is of course on the 15 minutes, but I managed to catch this move. Look at that. A beautiful move, and then it dropped like that. This is like 100 pips. 100 pip move, guys. This was nice. Yeah. So you guys, I really hope that you actually got something out of this. I really hope you do, because I've given you guys everything in this video. Please, the least you can do for me is subscribe, like the video. Also, please comment in the comment section. Let me know if there's anything else you'd want me to do. All right. Otherwise, I feel I've covered this topic to the fullest. If you think I've left out something, please let me know. Otherwise, thank you so much for watching our videos. We appreciate the support that you're giving us, and thank you so much. God bless you and have an amazing day. All right, bye from me. Until next time. Thank you.